Venture capital, as enticing as it sounds, has its place of relevance, but it isn't universally applicable. Founders aiming for explosive growth within a massive market may find it beneficial. However, those whose businesses depend on sustainable practices must consider alternatives. It's crucial to understand your long-term vision and the nature of your operations. Balancing aspiration with reality leads to smarter decisions that align with your business model's trajectory. Don't just chase prestige, seek the funding that suits your unique goals, allowing you to thrive without compromising your ownership. Venture capital's allure is undeniable, often glamorized through success stories and the promise of rapid ascendance. However, this can lead entrepreneurs to overlook their actual needs. In doing so, they may chase after the glimmer of venture funding without assessing whether it aligns with their company's fundamental structure and long-term plans. It's vital to embrace a mindset centered on the sustainability of their business, where the right capital strategy serves as a bridge to desired outcomes rather than a burdensome weight. Mistakes in this area can cost more than just equity, they can affect the very essence of the company. Yet, many entrepreneurs still find themselves captivated by the idea of venture capital, viewing it as a golden ticket to instant success. The allure often stems from tales of unicorns that captured the imagination of ambitious founders, leading them to believe that VC is synonymous with triumph. However, this perspective can lead to significant misalignments when the reality of their business doesn't match the accelerated trajectory that venture funds typically expect. It's paramount to differentiate between the startup's narrative aspirations and the practicalities of building a robust company that can endure market fluctuations while achieving steady growth. Thus, aspiring founders must engage in careful self-reflection and analysis of their circumstances before setting out on their funding journey. Venture capital can catalyze extraordinary growth, but it also imposes a weight of expectations and pressures. Founders need to recognize that while investors may provide significant resources, they also seek rapid returns on their investments, often influenced by the fund's lifecycle. The rush to meet ambitious milestones can lead to burnout, misalignment, and potentially jeopardize company culture and values. Entrepreneurs must remain vigilant, ensuring that the pursuit of growth does not overshadow the integrity and sustainability of their business. Ultimately, the decision to engage with venture capital must be viewed through the lens of aligning it with one's core mission and long-term vision. Understanding the venture capital ecosystem extends beyond simply securing funds. It encompasses recognizing the pivotal role of both limited and general partners. Limited partners inject substantial capital while bearing most of the risk, whereas general partners manage investments, guiding startups towards growth and eventual exits. This symbiosis drives the fund's success, but it also sets a dizzying pace for the startups involved. The pressure to deliver exceptional results often results in a twofold impact. It can lead to accelerated growth possibilities or stifle innovation due to mounting expectations. Thus, the relationship between founders and investors must be meticulously navigated, ensuring all parties hold aligned visions for the future of the business. In essence, founders must evaluate their business models critically against the backdrop of their capital options. Not all paths lead to the same destination, and it's prudent to acknowledge that the right funding mechanism can make all the difference. Engaging in a thoughtful assessment of the company's core needs, growth aspirations, and market dynamics creates a solid foundation for determining the capital route to pursue. As founders work to crystallize their visions in alignment with the structure of their business, they can mitigate the risks associated with choosing the wrong type of financial partner. Ultimately, success is defined not merely by the type of capital secured, but by how well that capital is leveraged to achieve operational excellence and long-term sustainability. In the vast landscape of funding options, entrepreneurs must consider various capital sources tailored to their specific needs. While some may envision a storied exit through rapid growth, others could excel by prioritizing stability and cash flow. Seeking a deep understanding of market opportunities, scalability, and team dynamics ultimately becomes the compass guiding these founders toward their financial strategies. Imagine choosing a constraint-free path, one that fosters innovation and resilience, rather than one driven solely by the race for venture capital. Companies flourishing outside the rapid VC model can thrive when they embrace their distinct business realities. Truly, the essence lies not in the pursuit of fame but in cultivating long-lasting value built on a solid foundation. As the entrepreneurial journey unfolds, wisdom dictates that aligning capital with company goals can triumph over fleeting trends, creating sustainable success grounded in strong fundamentals. Every entrepreneur must grapple with the foundational question: is my pursuit aimed at growth for an exit, or at developing a long-lasting enterprise? This introspection shapes the lens through which they assess their funding options. Engaging with venture capital might lead to rapid success for a select few, but for many, the essentials of a stable, enduring business can offer far more substantial rewards. By recognizing the unique characteristics of their operations, entrepreneurs can identify the optimal type of financing that aligns with their ultimate vision, be it through venture capital or other avenues, which in turn fosters innovation and resilience in their market journey. Ultimately, funding choices need to reflect not just immediate ambitions but the broader narrative of what success truly means for every individual venture. In the quest for the right kind of capital, understanding the nature of your business is critical. Entrepreneurs need to assess the growth trajectory they are aiming for, weighing the advantages of venture capital against other funding options. Those who gear their operations toward consistent, reliable expansion might find traditional financing more beneficial, allowing them to maintain control and focus on sustainability. By exploring various capital avenues, such as asset-based lending or revenue-based financing, founders can secure necessary funds without yielding significant ownership stakes. The right financing strategy not only aligns with a company's operational realities but also enhances long-term stability and growth potential. To navigate this complex landscape, consider your business's unique characteristics and market position. Conducting an honest assessment of your ambitions and capabilities will guide you toward the most appropriate financing strategy. Often, less glamorous options, such as bank loans or asset-based lending, can provide a more suitable foundation for businesses focused on sustainability without the pressures associated with venture capital. When founders recognize the necessity of aligning their funding choices with their operational goals, they can establish a financial structure that not only meets present needs but also paves the way for future growth. Choosing the right form of capital is essential in ensuring the business remains true to its vision and operational goals. Entrepreneurs must weigh their desires for rapid advancement against the realities of their company's underpinnings. It's a delicate balance. Understanding this could mean the difference between thriving and merely surviving in ever-changing market conditions. Founders should prioritize sustainable growth through strategies that enhance their company's strengths while considering whether they really want the watchful eye of venture capital investors or seek greater independence. Hence, taking the time to identify and secure financing aligned with both short and long-term goals can lead to a path of success firmly rooted in reality, rather than a fleeting illusion. Every entrepreneur must consider the broader ecosystem surrounding their funding choices, as the implications extend far beyond immediate capital. Local accelerators, angel investors, and government support can offer a wealth of resources tailored to different stages of growth. This interconnected network not only provides funding but also mentorship and guidance, which are crucial for long-term success. Ultimately, the focus should be on building a resilient business model that can adapt to challenges and seize opportunities, rather than being solely driven by external pressures to achieve rapid growth. Sustainability and a clear vision are paramount in fostering a company that can thrive in any economic climate. As founders embark on their funding journey, it becomes imperative to engage deeply with their market realities, assess their scalability potential, and determine whether they are truly prepared for the growth mandated by venture capital. Creating a compelling narrative around their business model, while authentically reflecting its uniqueness, will enable them to attract capital that matches their vision. Painstakingly defining success on their terms allows entrepreneurs to pursue paths that honor their values and sustain their endeavors long-term, ultimately leading to a more fulfilling entrepreneurial experience and meaningful impact in their industries. The venture capital landscape also extends beyond what founders initially perceive. Many entrepreneurs often get caught up in the excitement of funding announcements and success stories, forgetting that these instances are rare unicorns. The majority of startups face challenges that haven't been glorified in headlines. It's crucial to comprehend that while some companies thrive with VC backing, an equally significant number falter under the expectations imposed by rapid growth trajectories. Thus, a thorough evaluation of your readiness, goals, and market dynamics will guide the best funding strategy. In conclusion, choosing the right capital path is essential to aligning both the founder's aspirations and the operational realities of their businesses, ensuring that success is defined not by mere access to funding, but by cultivating enduring value that resonates with their true mission. Capital should match the fundamentals of the business, not the trend of the moment. And if you want help deciding which capital path fits your company, Equis Capital Finance specializes in sophisticated commercial financings from $1 million to $500 million across Canada and the United States, helping businesses grow on their own terms, with the right capital structure behind them.